Yo, y'all know the vibes, man. Y'all know the vibes already. Man, we here. Another RealRackMarket education video. You should know, to begin with, I want to say welcome. Welcome. I hope you've been having a good day. We gonna dive straight into the charts in just a second. We just go get some preliminaries out the way. As far as just checking in with you, you checking in with me, making sure we all good. Make sure, I'm gonna say this early in the video, make sure you saying your prayers, y'all. Make sure y'all talking to God. Make sure y'all taking the time out to just speak to him, and allow him to speak to you. Get in those moments of isolation. It's important, learn to mold yourself. The more you mold yourself, the simpler your journey can seem in your own perception versus you overcomplicating it all the time, because we can get caught in the rut sometimes, and we start moving like things are so hard, so complicated when it's really simple. So just a little advice for you today. We ain't gonna prolong though. Just wanted to say that you already know the vibes. RealRackMarket.com. Go to that. Make sure you check everything out. As far as in the making of this video, I've said this in my previous 2 videos. In the making of this video, the website is under maintenance, so you might not be able to just access it the normal way. Some things might change. If some things change, y'all will be the first to know. I promise you. I'm gonna let y'all know everything. Y'all gonna be good. There's nothing to worry about. So lock yourself in. With that being said though, because the website is under maintenance for probably like the next 2-3 days, what you can do is put your email, well, not put your email, send me an email. That's why I just dropped my email. Send me an email. Let me know what's on your mind, what you're trying to figure out. Maybe if something didn't make too much sense in this video, maybe you have a concern, maybe you just have questions, maybe you just want to figure out more. Doesn't even have to be about you being a part of the Real Rack Market community and you diving in deeper with us. It don't even got to be about that. Maybe you just want to just understand some things that maybe I've said in previous videos or this video. Maybe you just want to understand it just a little bit more. So, you have that opportunity. Just easily send me an email. It ain't nothing, like, comment, subscribe. Y'all know the vibes. I'm probably gonna say that at the end of the video, but I want to sort of get all that out the way now because I really want to just have the space and time to talk to y'all and really just give y'all everything that y'all need to be capable and profitable traders in these next coming years, because y'all have to understand things are constantly changing, and with things constantly changing, you have to constantly be evolving with this change. Despite whether you want to or not, you have to find room in your own life to move with the change, right? So we're gonna dive in. I got some key pointers that I sort of want to hit on for y'all, some things that I sort of mentioned, and I want to dive a little deeper into it. We also got some previous stuff. Like I said, we got a lot of stuff that we need to dive into because this ain't no one-way street. It's a lot going on with the market every day, and in one market, when you're really dissecting it, it's so many ways to fundamentally teach yourself. So let's just go ahead and dive in, man. Let's just go ahead and dive in. Let's see. In 3, 2, 1, go. Right? Did it start? No. 3, 2, 1, go. Boom, we in there. All right, I just had to make sure that we was on point, that everything will match up. You know the vibes. So officially, welcome to Real Rack Market Education. As you can see here, we got RIVN Automotive, the same company that we was going over the last time. We got some fun things to talk about because this company is moving. As we talked about last time, we said that the trampoline could end up making itself again, right? If you don't remember what the trampoline is, let's go over that a little bit so that you can understand. So boom, we're gonna zoom in just a little bit. We're gonna go back about right here. This is a little trampoline moment. This is around what we was talking about previous to, you feel me? Because our previous call out in this, when we made our first episode, was in December. So we want to talk a little bit about this area because it ended up proposing us a very good trampoline moment, and we took it, right? Or you should have, or at least should have been paying attention as we went over it in the market. So right here, as you can see, it goes as it's going up. You remember, purple line, all right? What is that? First and foremost, we're not going to describe them as lines. That's my bad. We're going to describe them as MAs because I want y'all to properly know what y'all are talking about. Now, after a while, you might start calling them lines just like I call them lines, and that's all right. But at the end of the day, they're moving averages. So with these moving averages, you can have them set at different time spans, you know, and move them around sort of how you want to. And it adjusts according to the prices that's going on in the market currently. So you got purple MA, right? That's your closest MA in this strategy. So that one's going to be moving the closest to the current price that the market is in right now. You get what I'm saying? So if it's worth $3.55, the purple moving average is probably going to be around $3.53 or $3.54 or $3.56. It's going, you know what I'm saying? It's going to be close. So pay attention to that. And then you also see right here, we got yellow. Yellow followed up. That's the next one, right? That's our next area. Remember what I said? Between right here, right? What I say? When the prices go between right here, that is our layer one between yellow and blue, correct? Between yellow and blue, that is our layer one for education purposes on YouTube with trampoline, right? That is our layer one on the trampoline between the blue and the red. That creates your layer two, right? And then below that, or vice versa, above that is when it is above or below your trampoline zone. So that is, again, something that I like to say is a possible moment of transition. All right, y'all will probably hear me say that a lot because I want y'all to understand that markets are still very unpredictable in every single precise movement. All right, you can gauge long term, short term. You can find where you read the market good, whether that's 5 minute through 6 month time frame. I don't know, right? You can find where you know where to read the market at. However, you have to understand that the market is still going to have its moments where it just do what it do. You know what I'm saying? And it can fluctuate, it can be volatile. So you never necessarily know. You feel me? Nobody can really say, and this is coming from somebody that's just keeping it a buck with you. Nobody can fully say 100% this trade is going this way, this day on this time at this moment, right? They can say that. However, will it be as accurate? Maybe. Yeah, I won't knock what you can do. Maybe. But at the same time, it's still going to have its own pattern, its own flow, its own little rhythm that it's going to follow before it necessarily does exactly what you can know exactly what it's about to do, and you can say it's going to happen on April 11th, and it end up happening on April 12th. Feel me? Because that's just how the market flows sometimes. So remember that with the trampoline zone, that's how you gonna read it, right? Remember, we got the purple, yellow, blue, red. All right. So, and then also remember you got your major MA. This is the one that's changing colors up here. That's the biggest trailer. It's red and green, right? You got your major MA. It's a moving average. Remember that. All right. So, some things that I wanted to dive into. Now that we've sort of gotten some of those little preliminaries out the way, some things that I wanted to dive into is where the price is right now. we said that it could have formed its own little trampoline again, right? However, as you see, it did not. It didn't go through right here. You know, this was the area where we thought, oh, okay, it's looking a little pretty, right? Let's go down in time frames. Let's go down in time frames. We're not gonna waste no time. Let's go down in time frames. As you can see, right here, pay attention. What did I tell y'all? This is a major moving average. So when you find your spots, right? Your perspective in the market, when you find it and you understand where these moments of transition happen, you can watch the market either break through or retest. All right. Now, in this moment, it could have been a breakthrough moment. Why do I say that? Because as you can see in this 4-hour time frame, it rolls up above its trampoline. It formed it. It formed it beautifully. It was trading up. It even bounced right here, as you can see. It bounced from this zone, went up. Remember, we try to pay attention to the prices, not the moving averages too much. Now, the moving averages support what we're looking at for the prices. All right, but the moving average is not the price. So you should not be trading based off the moving average. You should be trading off the price. Price action trade, simple. All right. Now, having a strategy attached to that is great. You understand? But that's why I also told y'all, learn how to read the markets in different ways, especially naked. Because when you learn how to read the market in a naked form, then you understand price action trading way more than just reading off a strategy, because sometimes then you rely off a strategy too much, and then when the strategy throws you a false indicator or throws you a false signal and you think, okay, this is good, and it ain't good, now you upset with your strategy, and now you trying to tweak things in your strategy thinking like, okay, now I need to make this happen and make this happen and do it like this. And in all reality, you really just needed to understand what you were seeing probably just a little bit better and not really do too much tweaking, maybe just a little bit. You know, some things do need a little, little work. However, focus on what you could have already seen, what's already in front of you, because sometimes you just miss some minor details. This is not, again, as easy as people make it seem. It can become something that is like drinking water to you. However, you still have to remember that you're going to have to take the time to really learn this stuff. It's not going to be so simple. It's not going to be so quick. It's not just going to be, okay, I can look at the market like this, and look at the market like this, and do this. Oftentimes, we see a lot of people that's telling you, okay, I'm profitable, and there are some people that are profitable, but understand, all people that are profitable are not really knowledgeable in what's going on in these trading markets. Some people just come across some good ideas or come across some good opportunities. Sometimes that strategy worked for a little while, and then I've seen people literally talk about it, and it's crazy, and I ain't gonna talk too deep, but how they've blown accounts in a matter of seconds. And sometimes it's probably off some of those little smaller details that they might have missed, that they could have fine-tuned in their strategy. Now, I'm not saying that necessarily they did anything wrong, because it can happen to the best of us. You feel me? It can happen to any of us in these markets. And again, they are volatile, but that's why you need to know what you're trading, how you're supposed to trade in that market, and know the levels, the ranges, the volume, what's going on in it. You know, if you just getting into something just because people say get into something, that's not really that good. You understand what I'm saying? And that sort of contradicts even myself when we're really talking about it. Because sometimes I tell y'all in certain videos, okay, do this or do this or do that, right? But that's why I always tell y'all, I give y'all the full disclaimer. Do your own research. Look into these things, because when you look into it a little bit deeper and you start gaining some of those smaller details, learning a little bit of what I'm trying to tell you on a smaller surface, right? You'll understand, okay, he's trying to just open my awareness to this, you know? And then when I open your awareness to it, it's like, all right, now I can see in my own perspective that this might be a good move for me. Take it. So, that being said, right, it threw a false signal, as you can see, because right here, it did not go through its major MA. It ended up going right back down. And right now, it's still trading down. Now, this trampoline, again, has the opportunity to form itself, right? So let's just look. We're going to pay attention to right now, right here, and right now. We're not even going to focus too much on nothing else. We're just going to pay attention to this trend. So from anything after this, look, I'm going to show you. I'm going to make sure that you and me are on point with each other. Hold on, my bad. Anything after this white line, right? That's all we focusing on for right now. Boom. Let's dive into it. What did it do? All right, so as it was going up, it was looking pretty. It traded up. Let's pay attention simply to the candlesticks for the moment, and then I'm gonna break something else down for you. Let's pay attention simply to the candlesticks for a quick little second. As you can see, the prices went up, boom, about 13.21. Started dropping back down that next day, went right back below. All right, boom, went back up. All right, tried to go up a little higher, folded back down. Then that's when it really went down for a good little minute. As you can see, this is a moment that it went from 13.27 down to 11.70. All right, pay attention. Pay attention. This is a good moment where it had a nice bounce down that has money in it, but it is not a full trend quite yet, right? It ends up bouncing back up, right? This trend also has money in it. Pay attention. Boom, it goes up. However, it does not continue as much as it could have. It could have broke through more. But this is what we really need to pay attention to for a second. Let me teach y'all a little bit of something about resistance and zones, right? So boom, as you can see right here, this is about the height of where it went. So we're gonna start from the first high. As you can see right there, that's where it went. And then when it tried to break through that high again, it did not do it. Where we gonna set our low at for right now? We're gonna set our low at boom, right there. Keep it very simple. Keep it very simple. Boom. So let's pay attention to this area. As we see from this white line, it's going up. Trampoline forms itself. Once it forms itself, it's in this current zone, in this current area that maybe at this first moment in March, on March 21st, might not have known that it's about to make some new zones and do some new little patterns. But this is why I tell you that the market has a consistent up, down, up, down, up, down pattern. Doesn't matter what it is, whether it's up, down, down, up, down, up, whatever, I don't care. Feel me? It's gonna move in that same pattern. It does not move sideways. You will not find one market that moves sideways, literally. You won't. You'll find a market that moves up and down. It might go like this. So again, how I showed y'all the other time in the past episode, in episode 2 about consolidation, you'll know that that's those moments. But you ain't gonna find this. I'm telling you, you're not gonna find this because that's not how the markets trend. They go up and down. That's how prices move. It has only one way to go. You get what I'm saying? Now don't get me twisted. Hear me. Now there are in some markets, because I might be lying to you just a little bit, in some moments where you might see that little slight bit of consistency where it goes completely across, but it also depends on the type of charts that you're looking at, the type of volume that's in that, and what's going on, and just what you're looking at. And y'all will understand that in just a second because I'm gonna make it make sense. I'm gonna make it make sense. So boom, right? We going up. The trampoline formed itself. It started going higher, as we can obviously see. Like I said, it formed a little top up here. It tried to go through the major MA, didn't. Boom, drop down. Boom, came right here. Now this is what I want to show y'all. Patterns. These are simple patterns that most traders know, and I'm putting you on simple patterns that most traders know. Double top. Something a lot of people know about in the market. Simple one. When you see these double tops, it is possibly a moment where the market is about to completely go down and is going to break through that bottom barrier, whatever bottom barrier it had in that current trading moment zone, however, right? It's going to break through that bottom. And once it breaks through that bottom, you have the opportunity to either see a full breakthrough or it might still come back and retest back up because, again, these moving averages are still very much supporting prices. So the price that you see on a day-to-day basis is still going to at some point be around or come back around its moving averages at some point, as long as you ain't just setting some crazy moving averages, right? So look, Pay attention. When it dropped back down, right, as you can see, we're gonna focus right here. It didn't create its trampoline fully. Tried to go back up. It made the trampoline right here, but then as you can see, the prices was not supporting that. Prices was not supporting what the trampoline was doing, was it? No. That's why I say pay attention to price. It wasn't supporting. As you can see, it started going back down, went right back below its major moving average. Boom. As it was going down, it ended up creating this trampoline right around here, fully, with the blue going down. Once it created that, as you can see, we just going right here. So about $11.51. $11.51. From there down to its farthest bottom, $10.37. There's money in everything. There's money in every trend. There's money in every trend. Remember I told you that. I told y'all that in a previous video. I don't know what I put it on, but remember I told you that. I'm gonna say that a lot too. There's money in every trend. You just gotta know where to look. See, that's why for your natural traders, right? For people that hear about investing in a simple term, they think buy, sell. They think buy, sell, and that's it. Yes, that is true. But what you have to also understand is that the market gives you so many versatile ways to buy or sell a stock or a company, right? It gives you so many versatile ways to be able to do that, to make you some money. All right, I'll show you in a second. So what I want to do first and foremost, right? Let's get y'all to a point. Hold on, let me delete some things real quick. Actually, no, I'm gonna keep that right there for y'all, because that might be important later. I don't know why I think that, but that might be important later for you to be able to still see. So boom, this is what we gonna do. We're gonna draw a Fibonacci retracement because I want y'all to be able to understand it. We're on a smaller time frame, and I want y'all to understand I'm trying to make you understand, or at least trying to help you to understand, I should say, that smaller time frames create bigger time frames, right? So one simple tip, whatever, that you can take from me right now: learn how to read the market from a small time frame up. I'm giving y'all gems, gang. I shouldn't even be giving y'all these type of gems. I ain't even gonna lie, it's crazy. I shouldn't be giving you these gems. Listen though, learn to read the market from the small time frames up. Bro, pay the price. Listen, let me talk to you. When you can see and understand and get your strategy to a point where it even makes sense through seconds, now you starting to understand what's going on in the market a little bit better, right? That's why I'm telling you, learn to work your way from the bottom to the top. See, a lot of people, most people, when they see a real anything, when it comes down to that, like the investments and stuff, they see bigger time frames. So they probably seeing something from a day or up. They're not really seeing those smaller 4 hour, 1 hour, 30-minute movements, 15, 5, 1 minute movements. They're not seeing all that. They're seeing simply the bigger movements. And those bigger movements, yes, they show a lot, but they also don't show enough. You feel me? So remember what I'm telling you, y'all. Remember what I'm telling you. Let me make sure we good. You know the vibes. Let me make sure we good. All right, we straight. We straight. So look. All right. These smaller time frames create bigger ones. So we're going to pay attention to this Fibonacci retracement. We got the Fibonacci retracement right here, top zone, boom, because we going from the uptrend. We started it from the bottom of it, right? So with that being said, at this top point, that is 100% of the trend. That is 100% of what the trend gave you in the market. You understand? Now, down here, right? Down here is where you notice that the Fibonacci continues steeper, because this is how naturally the markets were supposed to be read. You probably have heard of the term FOMO, So fear of missing out. You have probably been a victim of FOMO. You have probably heard about a company or heard about a crypto or heard about whatever in any instance, and you probably decided, all right, this sounds like a great opportunity. Everybody's doing it. Woo, 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 woo. You in it, and it tanks you. Right? And it tanks you. Listen, you were a victim of FOMO. Simple. And what I need you to understand is, we've all been there, but what you don't want to get caught up in is those moments where you think, okay, this finna keep going and going and going and going and going and going, and it don't go. Because you got to understand something that I can easily give you a description about is Bitcoin. Even still to this day, Bitcoin finally hit its 100,000 goal. I'm proud of it. Clap it up for Bitcoin. For the ones that invested in Bitcoin when it was around 60,000, 70,000, 80,000, before it hit 100,000, and you had your $1,000 or $2,000 or $3,000, $10,000 that you put into that, I'm going to just tell you in the most humblest way, you made money. Good job. Congratulations. I'm not mad at you for making your paper. There are way more opportunities. You understand me? There are way more opportunities out here for you that you could have put that same bread in, that would have made you way steeper returns in a matter of time. I ain't gonna put no time limit on it. But anyway, let's get back to the point, right? So, with that being said, right, you got the 100% of the trend. As you can see, the markets were naturally meant for you to read it down. That's why even Fibonacci retracements move like this, y'all. That's why they move in this certain area of how when you draw the Fibonacci and you go up, it's got this 0 at the top, because right here just means if it goes back through this 0 point again, it's breaking through, of course, a zone. Understand that. However, it breaking through that zone, it's going to have strength depending on how many times it's tested this zone. And I'm gonna keep it at that, right? I'm gonna keep it at that for you for right now, because we gotta keep it pushing. So with that being said, just pay attention how the Fibonacci retracement makes these different zones. So you got a 0.23, you got a 0.38, 0.5, which is 50%, right? That is worth any market. When that makes it worth it for any market is what I'm basically trying to say. So if you can make or get into a trend that captures 50% of what it lost or gained, you have done a great job. I promise you, you have done a great job, right? Depending on where you drew your Fibonacci, how you learn the markets, if you can find a way to gain back 50% of whatever was lost or gained in that trend, and you can find consistent ways to notice these moments, you are on a good path. Okay, I'm not telling you that's all you need, but you're on a good path. You got a 0.61, you got a 0.78 if I'm not mistaken, and you got a 1, right? And then that goes down to 1.61 and 2.61 and a 4.68. All right, because that's how they even know that retracements work. So look, the reversal, I should say, my bad. The reversal of any market is going to be the biggest pull that market has in that time frame. So let's say, for instance, something has been selling for 5 weeks, and now finally a week goes by, it creates a good buy opportunity. Now for the next 20 weeks, people have been buying into this company since that 5-week loss. That happens more often than not in markets if you pay attention to how they have even set up markets and reading markets. These things propose themselves to you. They literally show themselves But you have to be able to slow down and take it step by step when you looking at your market, when you're dissecting your market. Because if you're not, then at the end of the day, you're gonna overcomplicate it. You don't want to overcomplicate it, right? So look, let's pay attention. Let's pay attention. So as you can see right now, it done tested this zone right here. Where it first started, it done tested this zone, boom, 1, boom, 2, boom, 3 times, right? Now, what could that possibly mean? Let's go a little deeper. 30 minutes. We didn't make it to this last time. 30 minutes. Look at that. Y'all know what I told y'all before. Now, this is not full consolidation, understand, but I want y'all to just notice something. All right? Look at where it's sitting. Look at how it's playing around in this moment with its trampoline, with its major moving average. You get what I'm saying? Pay attention to how the prices are they're fighting this right now. They want to go down, but they also want to go back up. All right? Let's move into the 15 minutes. Let's just look at it. As you can see, it done had its moments where it did actually prove on the 15-minute time frame to have a trend. What do I mean by that? I'm gonna make these arrows a different color for you. Look, this is a trend. Y'all know the boss, I'm gonna do purple for you, because that color stand out amongst all when it come down to half of this. Boom, that's a trend for you. Look, that's a trend for you. Really, it continued about right there, if I really want to be honest, but we just don't look at that. Boom. And I'm just pointing out a couple. I'm not going to point out all of them. Just look, that's a trend. Look, that's a trend. This is a current trend. Look at that. Y'all see all those? All those arrows are moments where the market is trending. So it's not doing this. It's not consolidating at the moment. It's trending. You feel me? Now, in the moment of while it's doing that, right, as you can see, we're going to focus on this last one. Let's delete these arrows. Hold on. Why I didn't want to make too many. Then I would have been deleting all day. As you can see, right now, it went back down. As you can obviously pay attention to, it's doing the same thing that it's been doing across this zone the whole time. And as you seen, I just drew this Fibonacci retracement. Yet, the prices are supporting what the Fibonacci retracement shows you. In zones, in moments, right? That's why, as you can see, even when it fought its way back up 50%, right? It went right back up 50% and dropped back down again. Because that's a good marker for you to pay attention in the market too. You know what I'm saying? I don't know if I said that right, but that's a good point. That's a good spot of the market to pay attention to. Feel me? So look, we could even go down to the 5-minute time frame. Let's look at it. 5-minute time frame, look how it's been trending. It's been below that moving average this entire time. Look at that. You see it? It's been below the moving average this entire time. Up until, look, this is where that first top was. It was above that. Like I told you. Look at that. Boom. Remember how, I'm gonna show you. Remember how it went back down below and then it ended up going back up? Look, even supports right there. Look, right here, this is the first top that you got. Look, let's go back up a little bit so you can see it. So you can see what I'm trying to tell you. Hold on, zoom out just a little bit. Look at that. See that? See that? I want y'all to just look. That's all I want y'all to do right now is just pay attention. Just pay attention. You got this top right here. It went back down. It tested this zone right here. Right? Didn't make it all the way through. Came back up. Came back down. This is 30 minutes. Remember what I told you. You see how it's playing around down here. Really don't want to do it. Came back up. Dropped through that. Went through the 50%. Dropped back down. Feel me? Just pay attention. Boom. You got the 1 hour. You see where I said this little moment right here is playing around a little bit in these white arrows. You get what I'm saying? It's still playing around in those white arrows, which could either be a sign that it's fighting so much that it ain't gonna go through, or it could be a sign that it's gonna go through. We just gonna have to see, right? This is the 1 hour. We go back up to the 4 hour. As you can see, pay attention to how the zones how all this stuff still reflects. See the arrows right here going through these little prices, it's still playing. You know what I'm saying? Now, this is what's important as well. Let's go back to the day. I don't know if it might look a little funny. Yeah, we're gonna go to the day. Alright. Let's get rid of the arrows. Get rid of the arrows. So I wanna show y'all something. We about to get into it. I wanna show y'all something. So look, right now as you can see, purple below the red, yellow about to go below the red, hadn't did it yet. Blue still up here. You can see they're trying to make their trailers. They could keep going down. They could, all right? It could keep going down, or it could end up keep trying to fight and make its way back up. Now, this is what I want to show y'all, because I mentioned it the last time, and I sort of want to get into it a little bit this time, right? And then I'll check the camera, and then I got a couple other things that I want to show y'all too, right? So look at this. This is what I wanted to show y'all when it comes down. Hold on. Let me take some stuff away, make it a little easier for y'all to see what y'all need to see. All right. Boom. So look, this is what a line chart will look like. Let's just go back a little bit so you can see the actual line chart first before we focus in on the area that we're talking about. This is what a line chart looks like. Okay? And you remember how I told you that the market probably wouldn't do those little sideways moments? Well, look, this is that little sideways moment that I said, like sometimes it can in little instances or little moments. And I got another way that I'm gonna show y'all too in different forms of markets of how I can do that, but it's not often that it's gonna be sitting there doing this. You get what I'm saying? The trend that it's gonna continue to make most times, more often than not, is up, down. Even if it's sort of slanted, it's gonna make an up, down rotation. So as you can see, I just wanted to show y'all the line chart. Boom. You can see up here how it makes tops, double top, boom, drop down back below, boom, try to go up, boom, tried to go again, drop all the way through. You get what I'm saying? Ended up going below the trampoline zone. Remember, this is the price right here, this line that you see, this purple line. This is the line chart currently. And it just goes down. Just pay attention to it. When it tried to fight the trampoline, you see, look at the moments where it tries to fight the trampoline. Same as I told y'all before. It does, you know, everything still holds true. You get what I'm saying? Everything still holds true. Fought above, couldn't do it. Double bottom. Look at this double bottom right here. Ended up going ahead, going up above that trampoline. Since then, it really has been trying to push back towards that moving average, right? That major MA has been trying to push back towards it. It just ain't had a full push yet, but it also hasn't had that full push to continue down more currently, ever since it went back above its trampoline back in December from when we was talking about it. So if it's gonna continue to go further down, what you would have to understand is that means prices would go probably 9 times out of 10 below right here. Hold on, I'm gonna mark it for you. And then we're gonna go back to the candlesticks. So about like right here, we're gonna mark that in purple too. So about $9.69. So prices end up going below that. At that moment, RIVN is probably tanking. They probably not doing the best as far as stock prices. And you just gonna have to keep your eye on it, right? However, at the same time, again, it could end up forming itself to be able to rise back and go to higher heights, but we'll just have to see. So those are just some things that I wanted to talk about as far as in this. However, I want to tell y'all something, man. I want to tell y'all something. One more gem before I go, because I feel like this is important that you know this. And let me make sure we good, and then I'm gonna give y'all my gem and we gone. All right, bet. Let me give y'all this little gem, because I said it earlier and I told y'all gonna hear me say it every time, right? Let me go back to because we still record. Hold on. I mean, dang, I done did something. All right. Boom. Right. All right. So So let's pull all that back up. We're gonna keep it looking like this because we're gonna end up talking more next episode and some more stuff like that about some different things. So actually, before I give y'all my gem, let's just see if they got anything going on. Just see if they got anything going on. Release first quarter deliveries. Oh no, not yet, Motley. And the stock tank, if you like RIVN stock before the day, you should like it even more now. That's what they saying. Okay. EV deliveries declined by 36% year over year. The number of units shipped. Okay. Let's just pay attention to little details. Just see what's going on. All right. Nothing here. Nothing too much here. We got a little something, but nothing much. All right. Let's see. Let's see, after downgrade. Too many short-term challenges and a delayed payoff. Okay. So, as you can see, it's really no news on it if you're really paying attention. Hold on, let's go back to what we need to see. It's really no news on it if you're really paying attention. There's no major news that's going on. They not really reporting anything on front page that you can see that's sort of affecting the markets as far as that goes. So let me give y'all my gem, because obviously it's nothing really too much to talk about right there. So let me give y'all my gem. All right, I told y'all there's money in every tree. I'm gonna check this one more time. I got to, because I gotta make sure I gotta make sure this go through. Look, there's money in every tree. All right, that's what I need you to hear me on. I do not talk a lot about contracts, options on this page, on this channel. However, when you lock in with me, you have more knowledge than you will ever believe on the profitable opportunities that are coming in the market day by day from me. You know what I'm saying? Like you have access to it because I'm gonna tell you, I'm gonna let you know, I'm gonna keep you on your tippy toes. Make sure you know everything that's going on with the company that you're dealing with so that you know every best possible move that you can make. You know what I'm saying? There is money in every trend, y'all. So those moments, I want to talk about this specific moment right here where you see the prices have went up, right? April 1st, $13.42. I'm just gonna show y'all something. Now, I can't go too deep into it because that's giving you too much sauce. However, when you're picking a contract that you wanna trade, you know, in each contract, let me break it down because there's some people that don't really know what I'm talking about. Contracts are options, right? So in an options contract, you have the right to buy or sell 100 shares of whatever company that you just picked. So I'm gonna break it down very simply. If you buy a call, you want the price to go up. If you buy a put, you want the price to go down. All right. So I'm gonna leave it at that for right now because I don't want to overcomplicate your brain. So for the people that are aware of this anyway, because there are people that obviously make a living strictly off options contracts, they know that for every cent that company moves, it is worth $1 on your contract price itself. So whatever you purchase the contract for. So say for instance, you buy a contract that is worth $1. It says $1 when you go through the list. It says $1, right? That means you are really going to be paying $100 for that contract. All right. going to be paying $100. So that is going to be your position at that 1 cent. We're focusing strictly on contract price. We're not focusing on nothing else. Just pay attention to what I'm telling you. Every 1 cent movement is worth $1. Okay? When you purchase a contract, you have the right to sell that contract within the time frame that you purchase it. Whether you want to sell it out of profit or inside of profit, you have the right to sell it whenever you want to. You do not have ownership of the contract itself until after the expiration date or until you exercise the contract, meaning you put the contract into effect. Okay? Once you do that, right, you take ownership of it. However, we're simply talking about the contract price and the contract itself. We're not talking about you executing, you taking ownership of any shares. We're talking about just the price. So that $1 that you've seen, right? So when the markets are moving, the reason I say there is money in every trend is because you have a moment where this market can be right here, and then this market can be right here, and this market can be right here, and then it can be right here, and then it can go back down right here. Okay? Each one of those carried some money in them. Now, how much depends on your position, how you trade, when you get in your entries, you know what I'm saying? All that good stuff is gonna pay attention to. You gotta pay attention to all that to actually know how much is really within each trend. However, there is literally money in each trend, and I'm about to show you. So look, obviously y'all know I'm gonna have to block some things out, but I wanna give y'all a little insight, all right? Look, so we looking at $13.46 was the price. Now, I'm not gonna tell you why or how I came to the conclusion to look at the 14.5 cent call, right? Remember, call means buy, put means sell, right? So I'm not going to fully go into detail why I looked at this specific this specific put, my bad. We were looking at a put. I'm not going to explain why we were looking at this specific put in this moment. However, I am going to explain to you how the money works in selling. You get what I'm saying? Because a lot of people only know about buying. So I want to give you the opportunity to know about the opportunities in the market when it's selling. So that when the market, if I should say, the market ever has a moment where it crashes or things are going sideways in the companies that you own, you know what to do. You know what to do. And this is not the only way, I'm telling you, but this is one simple way that you can utilize the market if it's going down, if it ever hits a real recession point. All right. So we bought a put simply at the 14.5. That's the 14. We bought a 14.5 cent put. All right. Now look, I'm explaining this to you because I want you to see how the prices move. Boom. We're gonna go over here. Look at this. Expiration date. Look, I'm giving you an example. All right. Remember, this is an example. All right. So don't get lost in the sauce. This is an example. All right. Look, expiration date, May 9th, which is 31 days from now. Right. This is from now. All right. As you can see, the price right now, the asking price is at $3.95. So if you bought this put, you will be paying $395 for this put. All right, that would be your position. All right, that's how much money you would spend. I'm not telling you that just because you have that in your account that it's gonna let you do it. I'm just letting you know that's how much money you would be spending, plus whatever tax. You know what I'm saying? $395. All right. So look, that's right now. If you bought it right now, before, let's go into it. Now this is a little there's a little website, optionistics.com. Y'all, this is going to be a source for y'all that y'all need to lock yourself in with. I'm telling you right now, go lock yourself in with optionistics.com. The reason why I'm telling you to make sure you do that is because they give you so much little detail on the right details that you need to be able to see what's going on within the options market. And it's so convenient, y'all. So look, right here, let's make sure it matches. RIVN, automotive, you know what I'm saying? May 9th, 2025, 14.5 put, all right? As you can see, it's only going to go to the 7th because it's not going to show you what the day today has closed quite yet. It'll show you that tomorrow, right? Cool, making sure you understand that. Right here, as you can see, it's a little bit above, it's 2.5, right? So that means it was worth about 2.60 something, but to actually verify, to make sure that we're completely on point, look at this. The last trade, it tells you is at $2.65. All right, now y'all, this is all I need you to pay attention to. This is all I need you to pay attention to, right? Let's look at the market. So look, right here, when you see it was going up, boom, it made its top, boom, it made its double top. For a trader that might use this as a good indicator that, okay, I think I could catch a little momentum down real quick, right? I'm not telling you that that's what you should have did. I'm telling you that this is a moment where, as a trader, in your perspective or my perspective or whatever perspective you are utilizing, it could have given you a signal that this could go down, okay? With that being said, I'm not telling you why we were looking at the 14.5 in specific, but we're looking at the 14.5. So, with that being said, you can see the 14.5, March 28th, it was still opening up below 50 cents, all right? March 31st, it opened up $2.50. March 1st, it was around $2 for you to purchase this put in specific. Let's go back to March 1st. This right here is March 1st, where it created its final double top, right? So let's say as a trader, now this is not how trading works all the time. You're not gonna catch the perfect top and the perfect bottom, but I'm giving you the ranges so you can understand this, right? Look, you got $13.48 that we're gonna take. We're just gonna take $13.48. I ain't got no paper, but you hear me? Yeah, I ain't got no paper that I can write this down on, but we just, hold on. Matter of fact. We don't need paper. Who needs paper when you got technology? You got $13.48, boom, hold on. All right, that's the first price that we taking. And then right here, as you can see, it went down to $10.38. Let's take $10.38. Boom. All right, $10.38. All right, you do the math on that. All right, what is that? Take 10, 3, 310. All right, boom. Simple math. You know what I'm saying? That's why I had to play with you a little bit. 310, right? $3.10 difference. All right. What did I just get through telling you as far as the contract prices, right? Now, this was the difference that it made within that market. Did I say that prices are always accurate? Absolutely not. You never heard me say that. I tell y'all that even when we talking about Forex markets. Prices are not always accurate. Most things are estimated, and it depends on the current market that you're trading in, what you did, your decision, your position, how you decide to move. All right? Everything will not always be completely accurate to what we are necessarily saying right now. All right? Just want to make that clear. Boom.